each year the ATO have a target list, which is a list of all the things that they focus on when it comes to your tax return. Now, the list is usually fairly consistent, but it can change. Now, the first one is incorrectly claiming work-related expenses. So you must have spent the money yourself and not been reimbursed, and the expense directly has to relate to your earning income, and you must have a record, usually a receipt to prove it. You also need to keep track and a record of the hours that you're working from home if you use the fixed rate method. And the second focus is on claims for rental properties. Now, the ATO are specifically looking at people who are inflating those claims. So when you've got a rental property, you're able to claim expenses for repairs and maintenance, which is basically all of the costs of operating your investment. So the ATO want to make sure that people are not claiming inflated amounts. Now, lastly, you need to declare all of your income when lodging a return. So think not just about your employment income, but also about all of your investments like dividends or crypto, bank savings, side hustle income, that sort of thing. Now, they've told people not to rush lodging their tax return either on the 1st of July, because the income is pre-filled into your return and it's more likely to be pre-filled closer to the end of July. So perhaps wait until the end of July to avoid missing any income streams. Stage 3 tax cuts aren't new, but they did announce some changes in the 2024 federal budget. Now, every single taxpayer will be getting a tax cut from July 1st. And low and middle income earners will be better off. Now, it doesn't mean that it's going to affect your tax return, but it does mean that you'll get a little bit extra back in your pocket each pay cycle, and who doesn't love that? So on average, Aussies will get back an extra $1,888 per year on average. The reduction in the tax brackets include going from 19 cents to 16 cents, which is great, 32.5 cents to 30 cents, as well as increasing the 120,000 tax bracket to 135,000 and the 180,000 tax bracket to 190,000. Now, the other big announcement was the change to the HELPHEEX debt indexation. Now, HECS help loans rise each year in line with CPI instead of accruing interest, and that's because inflation was rising at rates higher than wages. So if you were making minimum repayments, some balances were higher the following year. So the government has moved to cap indexation to whichever is the lowest out of the two, out of the CPI and the wage price index. Now, you don't have to do a thing, but you won't be getting a cash payment. The ATO will automatically calculate your indexation credit and apply this to your HELP/HECS debt account.